Hello and welcome to Crypto Research Institute with me, Graham Rowan, here in Portugal, with my partner in crime, Dee Ludlow, over there in Dubai, and our very special guest this week, Connor Sellers from Crypto Empire in New Jersey. This truly is a global get-together. So thanks for joining us. And the question we want to answer is Michael Saylor wrong about Bitcoin? You see, he's turned his company MicroStrategy from a kind of a struggling business data outfit into the nearest thing we've got to a spot Bitcoin ETF. He spent so much money on it. He started with about $450 million from the corporate treasury, and then he's been out there raising more debt and raising new equity in MicroStrategy, and then using all the money to buy Bitcoin. So up to now, I think there's up to something like $3.7 billion worth of Bitcoin. He personally has got about $880 million worth of Bitcoin. So he's the maxiest of maximalists out there for the cryptocurrency. So the question I want to ask you, Connor, is he a genius or is he a fool to put all his faith in one cryptocurrency?
Yeah, so great question, Graham. And here's the thing with Bitcoin and with cryptocurrency. Yes, it was started conceived in 2008 and launched in January of 2009. We're still relatively early, and there's a lot of debate about Bitcoin. It has a lot of faults with it in terms of its usability and its use case, right? It's digital cash, right? It can only be used as a form of payment. But Michael Saylor took a bet on it very early, and he was the first company to really kind of make a huge stand and take a huge stake in it. So oftentimes when you're the first one to do something, you're ridiculed and you're ostracized by the group, by the herd. So I believe that Michael Saylor is differentiating himself from the herd, and he's highly perspicacious in the fact that he also predicted the mobile revolution that we had in the early 2010s, predicted everybody would be on their cell phones before anybody else. So he's made predictions in the past that have come to fruition, and he's taken a big bet on Bitcoin. I think he's early, and I think his bet will pay off massively. And I'm looking forward to discussing exactly why with you two gentlemen today on the stream.
But, I think it's one thing for him personally to be so into Bitcoin, and he's done very well. He's acquired it, I think, an average price of about $9,000. So he's sitting on enormous gains in his own portfolio. But as he raises new funds, new debts, and new equity, the average buy-in price has been going up and up and up. And if you look at the share price of the company now, it's kind of halved in the last 12 months. They made trading losses. So I'm thinking, if I was a shareholder in his company, how would I feel about this total focus on a cryptocurrency at a time when, the basic business seems to be crumbling underneath him?
So if you're a shareholder, you either have full faith in Michael Saylor or you're freaking out right now. There can only really be two ways of this going down for MicroStrategy shareholders. I actually have it in front of me right now. They currently hold 124,391 Bitcoin worth $5.5 billion. So they're all in, right? I mean, every cent they get, it seems, goes into BTC. So as a shareholder, definitely you might be a little bit nervous right now, but like I said, I stand with Michael Saylor. I agree with his thought process on this one, and I think he's going to make his shareholders extremely happy in the long haul with his decision to really kind of take a huge stake in Bitcoin early.
I'm not an expert on American company law, but certainly I think under British company law, a director has a fiduciary duty to the shareholders to kind of be the steward of their funds and how they get deployed. So I'm slightly confused that you can raise equity and debt in a trading company and then not use it to grow that trading company, but to put it all into this wacky investment over here called Bitcoin. Is he in danger of breaching some kind of fiduciary duty as a company director, do you think?
So that's a great point. And I believe that he is, in his mind, in his thought process, acting in his company and his shareholders' best interest with his fiduciary responsibility. It may not seem like it to the shareholders and to the majority of people out there because most people don't understand Bitcoin, yet alone cryptocurrency as a whole. So in his mind, I think that he is doing the right thing for his shareholders, but in everybody else's mind, it might be up for debate. So that's kind of a subjective subject that we can talk about. I would like to hear your opinion. I'm curious to know what's going through your head.
Well, I'll bring Dean in a moment to get his thoughts on this, but I think for me, I do think it's strange. I think it's effectively there's a rule in the UK where if you get above a certain level, I think it's about 20% of the assets of a company are in investments, the nature of that entity changes from a trading company to an investment company, and there are different kind of tax treatments and company legal things around that. So I'd be interested to know if that applies in America. And I suppose the other thing that strikes me about this, and I speak as somebody who's, I may be late to the party, but I'm very much getting into the whole crypto world. That's why Dee and I have the Crypto Research Institute. But I'm somewhat surprised that he's all in on Bitcoin and doesn't seem to want to know about any of the other cryptos that probably have stronger use cases. And in fact, if you look at something like Ether, has had a much better performance in recent times because of all those different use cases. So is he not, okay, it's one thing that he's into crypto, but is he right to be totally focused just on Bitcoin?
So that opens up a can of worms in regards to the whole Bitcoin maximalism debate. And it's really, the communities are they're still very tribal. So the Bitcoin maximalists think that, Ether is like they use the word Ponzi a lot, right? Because they had an ICO pre-sale, et cetera, et cetera. So, and the Ether maxis say Bitcoin is unusable, right? There's no smart contracts. It's old, it's clunky, you can't do anything with it. So all these communities love to kind of gang up and attack the weak points, the cons of each cryptocurrency project. But with Michael Saylor's philosophy of going all in on Bitcoin, I don't want to speak for him, but I'm pretty sure his thought process is that he thinks that Bitcoin will become the next world reserve currency and realistically, replace gold as that store of value, that hedge against inflation that gold has been used for since the beginning of time, really, right? Thousands of years in the past, gold has been used as a form of currency. So I think Michael Saylor is taking a bet on the fact that Bitcoin is going to be the new digital version of that. And it's a high risk investment. There's no doubt about that. There's a lot of other options of cryptocurrencies to buy out there on the market that solve all of these different use cases. But I really think Michael Saylor is trying to solidify himself as kind of like the Fort Knox of Bitcoin and hold a very large stake in the overall 21 million. And I'm interested to see. I do stand with Michael Saylor. I'm not a Bitcoin maximalist. I do hold altcoins, quite a few in my own personal portfolio, but I respect Michael Saylor's conviction in the fact that Bitcoin will succeed as digital gold, digital store of value in the end.
Yeah, I think it's very interesting because being in the sort of technology sector himself, that he has picked Bitcoin over all the others with the amount of use cases from other cryptos out there. The fact that he is sort of all in on Bitcoin. I do feel, though, he talks a lot about the savior of purchasing power, Bitcoin being the most, the optimal asset out there, and being able to refinance long term and being the sort of most desirable asset from banks long term to sort of lend against as well, like using it as sort of that sort of digital real estate sort of narrative he's going with. So yeah, but it is interesting how he's sort of gone down the sort of solely Bitcoin route and not picking, some of the technology in the blockchain space at the moment is incredible, and yes, some of the things that people are doing, and the fact that, it wouldn't surprise me if he is dabbling in a few others, but I know sort of for him, maybe the fact that he is, with the whole MicroStrategy thing, maybe if he goes down some other routes, may not look so good for them. He's already sort of getting a lot of scrutiny around just Bitcoin as it is. So yeah, we'll have to see how that one plays out.
Yeah, that's absolutely right. There's a lot of kind of public ridicule over altcoins. They're very high risk at this moment in time. And, you could lose all of your money in cryptocurrency, right? We see projects go bust all the time. So definitely a public image thing for Michael Saylor. He wants to maintain at least some credibility. So he's not going to be announcing that he's buying, Ethereum and Solana and Avalanche and Terra Luna, all these other kind of top altcoins. So I agree with you, D.
Yeah. And so I'm not sure if Graham has any much more to say on Michael Saylor at this point, because I'm interested in Bitcoin right now, especially for Connor's thoughts on it. So is there anything else you need to say around Michael Saylor at this point, Graham?
No, I think it's really, I'd love to know what his kind of end game is here, and the whether he's actually going to separate this out as a separate company from the trading operation, whether there's a message here for other businesses, for corporate America, and corporate Britain here, as to whether they should be putting more and more of their treasury funds into something like Bitcoin. And I think obviously what lies behind his conviction is that the dollar is becoming less and less valuable as it gets debased with all the money printing and so on, and therefore he wanted the store of value in Bitcoin where there's a finite supply, and that can't be messed around with by the Federal Reserve. So that's underlying his kind of views, and clearly other companies are suffering that same effective loss of the purchasing power of any dollars they're keeping on the corporate books. So I know he's very keen to try and spread the corporate adoption of Bitcoin in their treasury departments. Be interesting to see how many others jump on that bandwagon with him. So, but yeah, I think obviously how good or bad the strategy looks is going to depend on where Bitcoin's going. And lots of gurus have got egg on their face, having predicted massive prices by Christmas. What are your views on why those prices didn't happen, Connor? And what do you think is going to be different this year?
Yeah, so funny you say that. So I did have a high price prediction for 2021. With that being said, I have been speaking for a year now about a lengthening cycle for cryptocurrency. The fact that I think that the bull market will be prolonged longer than it has been in the past based off of previous data. So my kind of whole prediction, yes, we kind of had you can call it disappointing. I mean, I wasn't really disappointed. I was actually happier that we got, $40,000 Bitcoin, because I was personally buying spot BTC down at those levels, along with, like we talked about, some altcoins. But I mean, we'll keep it solely focused on Bitcoin for now. Nonetheless, I think that 2022 is going to be an explosive year for Bitcoin and for crypto as a whole. I don't think we're finished yet, and I still stand by those six-figure price predictions for Bitcoin. Yes, it didn't happen in 2021. Yes, my analysis was off. I have no problem admitting that, but I think it's going to happen this year, and I have my money where my mouth is. So I'm excited to see what happens.
Do you?
Sorry,
yeah. Looking at sort of Bitcoin and the whole euphoric stage that people expected in December, mainly. The thing that I've been thinking is, like, look, people said end of December, end of 2021, we'd have this euphoric phase. Then, because that didn't play out, halfway through December, when people realized it wasn't going to play out, I've seen a lot of the sort of YouTubers and even some of the top guys in the space say, well, 1st of Jan, we're going to see, institutional allocation. This is going to happen. That didn't happen. And now it's like, probably the end of Jan is going to happen. Now, do you feel that a lot of the sort of people in the space are just looking for confirmation bias at this point? Now, I'm one that believes this bull run is not over myself, but do you feel that the whole thing around Bitcoin, are people just looking for confirmation bias, or is the capital in the space already looking outside of Bitcoin when dominance is dropping, just because Bitcoin losing market share overall? The sort of store of value narrative of Bitcoin is kind of already now playing out. People are already looking at Bitcoin as a store of value. We're seeing, El Salvador, others now looking to adopt. Is it now where people are like, well, the ROI I want to get from crypto, are people now looking outside of Bitcoin already? And is that going to change the way everybody looks outside of Bitcoin because of these crazy marketing campaigns that are going on in crypto? Like, I'm looking at a returns chart here. NFTs have returned just under 8,000%. Smart contracts, cryptos, 2,000%. Meme coins, 1,000%, while Bitcoin was down at 58%. So,
Yes.
we're already seeing the market share dropping from Bitcoin. But is this going to be how it's going to look going forward, in your opinion?
Yeah, so you brought up a lot of great points with that. And the first thing I want to address is the fact that, companies, funds, institutional hedge funds, they are 1,000% looking outside of Bitcoin. No doubt about that. I actually recorded a YouTube video yesterday. It was about Polkadot. Polkadot is a Web3 infrastructure cryptocurrency blockchain. And it's actually the most held cryptocurrency by institutions other than BTC. Nonetheless, a lot of big funds, a lot of big money have put together top research analysts, top research groups, and they're heavily investing in the altcoin market. And then we have the retail market, which isn't interested in Bitcoin whatsoever. Because, like you said, they see those returns charts. They see NFTs returning, 80x. They see some altcoins such as, Terra Luna went 100x in 2021. Retail is after those gains. They're not interested in a 2x, a 100% return from Bitcoin. So the market is still heavily driven by greed. And then we can see moments like now, where we just experienced in December, total fear in the market. It drives the market. It's so emotional. It's still very young. And people are very greedy. It's human nature. So that's why they go and they buy all these other altcoins. But Bitcoin is, for sure, in my opinion, pretty much a guaranteed surefire bet over the long term. So you need more capital, which is why we have people like Michael Saylor and MicroStrategy putting billions in to really see astronomical returns with Bitcoin. So for the average Joe, they're really not interested in Bitcoin whatsoever, and they venture into altcoins. And I want to let you guys speak as well, but also you mentioned the crazy marketing campaigns that happen with these altcoins. A lot of it is all fluff. So you really have to be careful of what you're buying out there, because there's the infrastructure, really main blockchain cryptocurrencies. And then there's the projects that are built on top of the infrastructure. Be careful with the projects that are built on top of the infrastructure, because oftentimes there's a lot of money grabs out there. Same thing with NFTs. So just to anybody watching right now, just always do your own due diligence and really research before you make any investment decision.
And off the back of the Polkadot comment, so something that I think you've covered quite recently as well is the parachains, and how the parachains are really going to fit into the entire ecosystem. Talking about oracles, NFTs, just how they're going to fit in. Do you feel now institutions are looking at Polkadot and what it's doing? Do you feel that that's going to open up the door for other institutions to be looking out even further down the risk curve past Polkadot? Because Polkadot is kind of, yes, since last October, it was like $4, and yes, it's had a nice run up, but it hasn't really done what some of the others have done, such as like Solana, Terra, So how do you feel institutions are looking at those from your perspective?
Right. So good question. I think with Polkadot, a large reason of why institutions are so interested in it is because of who is behind the project. And that's Dr. Gavin Wood. And he actually, along with a few of his team members, actually wrote the code for Ethereum, right, for the Ethereum virtual machine. He was a co-founder along with Vitalik Buterin. So he then left Ethereum because he realized that it wouldn't be able to scale very early on. And he started the Web3 Foundation, which is a nonprofit based in Switzerland. And then he started building out the Polkadot blockchain. So I think for institutions, they look at a talent like Dr. Gavin Wood and they want to invest in the person behind it. And now, yes, it hasn't had any astronomical returns. It does have, a large amount of tokens in circulation, and it had a lot of very early investors get allocation to that. So that the tokenomics may play a role. But I think a main thing with Polkadot is the fact that it's really it was under construction up until a few days ago when Parachains went live. So now the network is actually usable. Things can be built on the network. Layer 1 blockchains can be attached to the Layer 0 Polkadot relay chain and allow for DeFi to explode like we've seen on chains like Solana and Terra, which has contributed to their astronomical rises in price. So I think Polkadot's just getting started right now, but I also think coins like you mentioned, Solana and Terra, are going to have a fantastic year as well.
That's interesting. I don't know if it's kind of retrospectively trying to justify things, but one of the people with a big price prediction was Raoul Pal, who said I think $200,000, and he's now done a kind of look back to see why that didn't happen. And he really highlighted two main events. One was China kind of banning not just the miners, but virtually banning the ownership of cryptos, and the number of wallets actually halved in the middle of last year when that happened.
Right.
And the other was good old inflation that we're finally seeing not being quite so transitory. And he was saying, look, a lot of retail simply had to start spending their money on food, on gasoline and rent and whatever, and therefore they had no spare cash to speculate in the markets. Maybe the stimmy checks ran out, so
Yes.
he's saying those two factors actually really were dampening on Bitcoin and other cryptos in the second half of last year. The wallets are starting to increase again, and obviously the markets will adapt. So do you think there's any validity in those reasons why it wasn't quite such a year for Bitcoin and some of the other cryptos?
I do think that I especially agree with the fact that the retail volume hasn't been in the market recently the way we saw in early 2021. I've actually, we can hop into the computer. I can show you the volume graph on the chart and point it out. But basically, it's an obvious decrease in volume that we've had ever since the kind of May 2021 summertime correction we experienced in the markets, where Bitcoin went down to 30K. The volume has dropped off dramatically, and a large part of that huge push up that we had earlier in the year was driven by retail. And I think the catalyst for that was Elon Musk actually buying Bitcoin when he put that huge purchase for Tesla. I think that caused a retail frenzy. And then my theory is that whales reset the whole entire market cycle by basically erasing all of the gains. Because if we look at the chart, basically after Elon Musk purchased Bitcoin at around $30,000, it went right up to about 60, 65. Then it came right back down to 30. So I think that whales reset the cycle, and they understood that a lot of it was driven by retail greed after Elon announced this publicly. So I agree with Raul. I think that retail is missing from the market, and China obviously was huge, right? Just constant fear narratives in the media. Crypto is bad. We're buying it. We're banning it. You can't use it, et cetera, et cetera. It's definitely not good for the public psyche. So I agree with Ralph.
Yeah. Yeah. So it's kind of, actually, it would be good to, if you can pull that up, Connor, that'd be good to see.
Absolutely. Okay. You guys should be able to see that, right?
Yeah.
Perfect. So let's go ahead and look at Bitcoin. I'm going to look at a cleaner chart. Let's look at the Coinbase chart. So I'm just going to kind of get rid of everything here. So we're looking at Bitcoin right here. Each one of these candles represent a 3-day time frame. Now, right over here in January, February, let me put a box on the chart. This is really where Elon Musk went ahead and purchased Bitcoin in this cluster around 40,000 down to 28. He was buying in here. Elon announced his buy, and Michael Saylor, of course, was buying on this whole way up. So Michael Saylor has a good average price. I think his average price is what, $29,000 for his 124,000 Bitcoin. So he did a good job. He's still up billions for his company. Nonetheless, let me put a horizontal line here. So as you can see, after Elon bought, we had this huge volume spike, as we can see in the market. And we had this huge explosive green candle breaking out, right? We broke out of this trading range with the $40,000 top. Coincidentally enough, price is using that same old resistance level as current support, as we can see right here, right? So this is a key level, and Elon Musk propelled the Bitcoin price through this key resistance level. Now, this was what's coined as the Wyckoff distribution top over here that we experienced back in the spring of 2021. And basically what I was talking about with whales resetting the cycle and with the volume. So if I just zoom out, after the market corrected over here in the summer, I want everybody's eyes to go to the bottom of the screen here. And I'm going to put another vertical line really kind of around here, right? So November, December of 2020, the market really started to pick up. Elon bought over here. Notice the volume. It's high. And now notice the volume after we had the huge collapse in the spring of 2021. It's noticeably lower. There's noticeably less trading volume in the market. I think both big institutions, big players haven't been trading as much, haven't been active participants, and retail as well hasn't been as active as they were in late 2020, early 2021. And the volume clearly illustrates that. It's quite obvious just looking at the size of these volume bars. There wasn't as much big activity in the market, both from retail and big institutions. So, yeah, do you guys have any questions about that?
What do you think we need, Connor? Like, so, we had, Elon jumping in, we had, crazy amount of retail jumping in at the time. What do you think needs to come out? Because it's a very media driven market, right? So what do you think we need to see in the media to really, bring retail back? Because, a lot of people are allocating a lot of their capital they have on the side into NFTs, and they're saying that retail follows trends, that retail just purely follows trends. So what do you think we need to bring this back? And because there's a few things we look at, right? Everybody waits for the institutions. Everybody keeps talking about waiting for institutions. But what if it's just pure daily adoption is that what's needed instead of waiting for institutions? Because they will come. They will come anyway at some point, like in force. So are we looking now for more of just daily use case for cryptocurrency as a whole? Or what do you think we need from the media at the moment?
Yeah, great question. I think a huge catalyst for crypto is really kind of succeeding is network effect. And in order for a network to really have a big effect, people need to start using it on a daily basis. So right now, the media kind of portrays the fact that Bitcoin is legal tender in El Salvador as a negative thing. The International Monetary Fund isn't a fan of it. The Bank of International Settlements, they're against it, right? Because it kind of strips away their power with central banking and fractional reserve banking. So I think that the media needs to basically change their stance on the way that they view cryptocurrency and be more welcoming to it. And I think if we start to see kind of governments utilize the technology more, I think that's going to allow retail participants to have more confidence and start getting involved, start opening up new crypto wallets and start funding it with the various different cryptos, layer one blockchains, and start actually using the networks. I think that once network effect truly kicks in, we're going to see parabolic growth in the usage and prices of these crypto assets. So the media needs to stop spreading so much fear and embrace the fact that this technology is here to stay and it's revolutionizing the world and making new systems, improving old systems. So, yeah.
I understand, but look, with El Salvador, like you said, the IMF isn't a big fan, which any loss of control is not going to make them a big fan. But just overall, it's not sort of the media's. It's not really in their interest right now to make a big thing of this. You can see that I've seen this week. It says that El Salvador's decision of adopting Bitcoin as legal tender was a bad decision because now they're in a loss and they've used this money to do this, when it wasn't in a loss, there was no media around when it wasn't in a loss and when it was doing good. So it's in the media's interest to put this down right now. So it's going to, I'm not sure what it is going to take. What's your thoughts, Graham?
Well, I think it's really, Yeah, I think, as you say, that they're talking about this wall of money. It feels like we're getting one or two bricks. We haven't quite made a wall out of it yet. That's obviously going to take a bit longer. And, institutions are slow moving. They're nervous, they're cautious. They're also thinking about the macro picture. Are we going to get massive inflation? Do we need to be kind of battening down the hatches? Do we need to be, pivoting from growth to value in our portfolios? There's an awful lot of things going on in the traditional financial world. And so there's probably a little bit of risk aversion just in terms of timing, because there is so much uncertainty. I mean, I can see us potentially having things like price controls being brought in this year. The people who are having to pay more money for basic things, that's going to depress overall economic activity. So, can something like Bitcoin push through against that prevailing macroeconomic picture? I think we're actually asking more of it than perhaps we were when things were, flooded with liquidity, perhaps, in 2020, 2021. So I think it's a tough call. I mean, I'd love to know what Connor's view on kind of a price prediction for the end of 2022 is, given everything that's going on. And I would caveat that by saying I think it's perhaps a slightly harder call than it was last year, because there are so many variables now. We don't quite know how the Fed's going to jump. We don't quite know, how inflation's going to handle. I'm seeing some charts from purchasing managers and so on that suggest inflation might actually start to reduce a bit in Q2 because the supply chains are up and running again, which was the old argument from the Fed. So there's a lot of confusion as to the macro picture. And I think the question now is where will Bitcoin sit? How will it perform against this very uncertain macro background? What do you think, Connor?
Yeah. So the Federal Reserve, central banks, they either expand monetary policy by printing money, or they contract it by printing less money and raising interest rates, basically making the cost to borrow money higher. So right now we're experiencing a contracting monetary policy with the Federal Reserve. And that's, in my opinion, a huge catalyst of why the market is so down at the current moment in time here, January 2022. But the thing is, they change their mind like the wind changes directions. They're constantly, they say one thing, and then in the next FOMC meeting, they're saying something else. They're bearish one day, they're bullish the next day, or hawkish, dovish, whatever, right? The terminology. They're constantly flopping. So that the market really heavily reacts to what the Federal Reserve, the Fed, is kind of planning. So it is very hard to predict, like you said, Graham. And if we're going to be talking about my price prediction for 2022 for Bitcoin, I mean, my stance hasn't necessarily changed, right? I said in 2021, I was expecting somewhere around $150,000 BTC. I still think that that's kind of a nice number to predict the price. I think it can definitely attain that. And I still stand by the fact that that's slightly conservative as a price prediction. I think it could overshoot that, depending on, if inflation continues. Like, I'm seeing more and more normal everyday people start to comment about inflation. Like, people are waking up to the fact that their money is losing so much value, and they're seeking alternatives. So obviously, there's a lot of people out there that will never consider Bitcoin, and they're like, it's never going to work. And then we have people with an open mind, and more people are getting this open mind. So human nature and how the population reacts to everything is a huge factor that we can't predict. Like, nobody can predict what a human being is going to do next, really. So I'm very interested to see how the year plays out, how the whole monetary policy, inflation plays out. It's going to be an interesting ride, and I think it's going to be highly unpredictable. I'm curious to know what you guys are thinking in terms of numbers and the whole policy as well.
Come on, Dee. What's your take, Dee?
Well, price prediction, I haven't made my mind up yet. It's too early for me to make my mind up. End of year price prediction. Yeah, I think that, look, people are waking up. I do feel that people are waking up to, they're seeing the CPI now. Most people didn't even know what a consumer price index was 12 months ago, right? And because of the the narrative around inflation, and because people has been locked down, and they've been online a lot more than they normally would. So people are looking for news, and I think people have waken up. So yeah, and I also think they've waken up to whatever those figures they do put out on the CPI. I'm pretty sure that a lot of people have waken up to they're not right either. So so I do feel that people are a lot more knowledgeable on this, and the sort of the loss of their purchasing power, and that's what's really skyrocketed asset prices across many different asset classes. People are just putting their money into pretty much anything. You're going to put your money into a pair of jeans these days and they'll go up in value, right? So I do feel that, not price prediction, I'm not sure. I do have a question for you in a sec, but I would like to get Graham's take on this as well.
Yeah, well, I'm not convinced that the kind of bull market that we've been in will continue for the whole year. I just think that, just
I agree
looking
with that,
historically, I think there'll be some sort of correction. So I don't think we're just going to see a straight line or a flat line. I think it's going to be very volatile. So I think you have to be engaged. I just did a video on my own Renegade report where I was saying, I think this year more than ever, you have to take personal control of your investment portfolio. You have to stay alert, do your own research. There could be some big shifts in the stock markets, the bond markets, the property markets, the crypto markets, and you've got to be on top of it. You've got to have some cash in reserve so you can jump in if there's some great opportunities at some point in the year. And you can't just assume that what's happened in the last decade is going to keep happening this year. So I'm nervous about some of the they're tech-heavy funds. If you look at Cathie Wood's ARK ETF, down 47% in the last 12 months. So you can't just, be complacent, make one decision and go away. So I think Bitcoin will go up significantly, but I wouldn't be surprised if there's another pullback later in the year. I also think, just from an asset allocation and diversification point of view, I do believe Michael Saylor is wrong to put his and all of his shareholders in a single basket, with all their eggs piled in Bitcoin. It may look okay at a certain point in time, but I think that is not going to be the most effective asset allocation going forward. So whilst I applaud his enthusiasm for Bitcoin, there's no way I would be a buyer of shares in his company given his current strategy. So for me, he's a very brave man, and I think you have to be even braver to be a shareholder in his company. So that's kind of where I see it. But do let me ask you ask your question of Connor, and then I think we'll need to wrap things up.
Yeah. So same as you, Connor. So even back in April, I was sort of making people aware to be slightly cautious that this cycle is going to be very different. If you go back to 2017, the media around cryptocurrency wasn't the same as now. Nothing was the same as now. It's so much more talked about now than it was. And even day to day, like when we hit peak euphoria back in 2017, it's kind of what a lot of people how people talk day to day about crypto now, and when the market is people would say in the red right now. So so yeah, I do feel that this cycle is going to be very different, and you can only work off probability and make sure you monitor it to try and navigate it as best as you can. But no one really knows how this is going to develop over this year. So I do agree with what Graham said too. We're going to see probably some very big swings and a lot of sideways movement, as well as a lot of upside and downside too. So just go down the some of the YouTubers route and say it's either going to go up, down, or sideways, and then when it does, they're like, exactly as predicted.
Yes.
So yeah, anyway, on to my question. So one question I'd love to ask you, I see you talk about layer ones, oracles, NFTs. I see you talk about a bunch of different things, and I've definitely got my thoughts. So I'd love to hear what you think are going to be the biggest trends in cryptocurrency for 2022.
Great question, D. So biggest trends, I think without a shadow of doubt in my mind, I think the biggest trend will be this year, play to earn blockchain metaverse gaming. I think 2021 was the start of it, where after the market corrected in the summer, these games saw astronomical growth. And it woke everybody up to the fact that they can actually just make money playing video games, and people are buying the main layer ones that I speak about all the time to then transfer into these game assets and these game tokens. So it creates this whole kind of economic effect where, all right, people go to the main exchange, Coinbase, Binance, crypto.com, whatever. They buy the Solana, they buy the Ethereum, and then they go ahead and they buy, whether it's, I'll throw some names out there, Vulcan Forge, PYR, Gala Games, huge gaming project. You're going to be seeing a lot of them developing this year. UFO Gaming is another gaming studio producing multiple play to earn games. So people go ahead and they buy the main layer ones and then transfer them over into the gaming. And then they start playing the games and earning a daily income. And that's never been seen before. They own all of their in-game assets. People spend days of their lives, years of their lives, cumulative playing video games, and they have nothing to show for it. But now we have blockchain where they own all of their assets in the game and all of their days of their life, literally, that they sat in front of the screen playing the game. Now they have something to show for it, and they can cash out, they can exit and sell that account for thousands of dollars. So I think that that's going to be the biggest trend in 2022. I think we're going to see explosive growth. Gaming studios are investing billions of dollars to build infrastructure, to build games right now. And I think it's going to take off.
Love that. I'm in agreement on the gaming stuff. It's something that we cover quite a lot inside our sort of mastermind group as well. Now, I'm going to give you a quick off-the-cuff question here, right?
All right.
If you could pick one very, very low cap gem, as people like to say, for 2022, what's your choice?
Okay. If I could pick one.
This one's for the gamblers. A lot of people like the casino, right? This one's for the gamblers.
Okay. Yeah. So the one low cap that I recently purchased, we just spoke about play to earn gaming. I think it would be smart to buy, if you're going to be venturing into low caps, you should focus on the sector that has the most potential upside, which is gaming. And the infrastructure isn't built yet, it's being right now. So you need to invest into the people building it. So it's very important to basically pick the winner early, pick the person who has the grand vision, who has success in the past. And one person who is big in play to earn gaming, or two people actually, are Alex Becker and this gentleman named Elio Trades. They're both very big YouTubers, have huge audiences, but they created a project called Neo Tokyo, which is an NFT ecosystem. And then Neo Tokyo holders get a token called Bytes. And this is very early on. This is very speculative, but it's an exclusive community, and the floor price to get entry is 50 Ethereum right now, which is hundreds of thousands of dollars, extremely high barrier to entry. And the holders of these NFTs get the Bytes tokens sent to them. And this is going to be a main part in the gaming ecosystem. They're developing multiple games. The biggest, brightest venture capitalists, hedge funds, gaming studios all own this NFT Neo Tokyo. And the only way to get the Bytes token is either to buy it on the open market or hold one of these 2,000 exclusive NFTs. Right now, the market cap is around $70 million, less than $100 million. So it is a micro cap coin. And I think with the people building that project, it's so early, there's been no use cases announced for it, but we know it's going to have a lot to do with gaming. So Bytes, BYTES, very speculative. But I have a little bit of it myself, and I think it have a huge year depending on the success of this Neo Tokyo project that Elio Trades and Alex Becker are building right now.
So just a quick disclaimer, folks. No investment advice
No
on here. This is all
financial
for
advice.
Information purposes and education only. But I appreciate the tip there, Connor. Thank you very much. So sadly, the clock is against us. That's all we got time for. So let me just say a huge thank you to Connor Sellers over there in New Jersey and to Dee Ludlow in Dubai. Join us again soon for another Crypto Research Institute interview. Thanks very much for watching.
Thank you.
Awesome.